What's up, you guys? It's Rob here. Today we're going to be talking about AMC. Yes, it did tumble 6%. We will take a look at that on the chart. We'll also take a look at the short interest through Ortex. We'll take a look at Stock Tracker as well. But the main thing that I want to talk about first is the passing of NSCC 2021-002. And what this is based around is what's called an SLD, a supplemental liquidity deposit. And we'll dive on in here and take a look at the SEC filing. I have read over it for you guys, and it really only boils down to this one sentence right here: is calculating and collecting, when applicable, SLD on each business day rather than only during the monthly option settlement periods. It's written in lawyer jargon, so it's a little hard to read, but basically what this says is, instead of calculating it once per month, we want to calculate it every single business day. Well, why were they only calculating it once per month? Well, let's dive on in here and take a look at like a stock like Tattooed Chef. If we take a look at this stock, we see it has July 16th as its next options expiration time frame. If we go take a look at AMC, we have a lot more. We have June 25th, July 2nd, July 9th, and then we have July 16th. July 16th is a monthly expiration time frame versus the 9th, 2nd, and 25th are all weekly expiration time frames. So essentially, institutions, hedge funds, all the other people besides us retail traders had to essentially say, all right, well, once per month, NSCC is going to look at us and say, well, we need to provide an SLD for this time frame. And they could drastically change their position between when NSCC looks at them and when they're not looking at them. So that's something that's definitely good to look at, and definitely good that this is going into place, is that every single day the NSCC is going to be going, all right, your SLD is this. Oh, your position increased, you have more risk, your SLD also increased because your risk exposure increased. And ultimately, when we look at this, that's exactly what NSCC wants to do, is manage risk. And they're doing that by saying, hey, members, y'all risky people, you're going to be paying more, you're going to be paying more, you're going to be paying more. And the people who are less risky are going to be paying less. And that's just their way of managing their risk and reducing their risk exposure. Ooh, there's a fly. Pardon me, guys. Fly is successfully dead, guys. I apologize about that. But basically what this is getting down to is managing risk exposure. And this is something that will definitely help us apes, because we've seen a lot of different short tactics when it comes to AMC. We've seen short ladder attacks and we've seen other questionable things. So this definitely will help us. Now let's go hop here into the charts and take a look at AMC for the day. Now, yes, AMC did finish down about 6%. We did hit $53.43, actually 10 cents away from triggering SSR, which kind of made me scratch my head and go, did they know this kind of thing? But I actually moved this line up from 53 and a quarter to 53 and 3/4 because we've done a really good job of actually bouncing off of this time frame versus 53 and a quarter, and essentially consolidating between 53 and 3/4 and 60 and a quarter. It's really difficult to say, but if we zoom out here to the 5-day time frame and really take a look at this, we've been consolidating within this time frame, which is good. Consolidation is not a bad thing, guys. Yes, it does suck to go sideways, and one day we're at the top end of the channel, the next day we're at the bottom end of it. But do you guys remember where we were back in like January when we were trading between like, what was it, like $9.50 and $10, and we were like, we got to get over $10, $10, and then we got over 10 and we were like, all right, 10.50, and then it was like 11.30, and we had all these different channels. We're just trading in one of these channels, but a lot further up, guys. The other thing that I want to highlight here on the 1 day, I'm sorry, I'm hopping around a lot here, but what this chart screams to me is one word: emotion. The shorts and all the selling pressure coming in here is trying to trigger you going, oh God, I want to panic sell kind of thing. But I mean, I'm going to be bluntly honest with you guys, and I'm not a financial advisor, not financial advice, but I'm like up over like 300% on my shares on AMC. So what does like $5 on my shares really mean to me when I'm up like 300%? Aside from that, not financial advisor or anything, but really I didn't blink an eye. I was like, Okay, I'm still up over 300%. Perfectly fine with that, in my opinion. But when we zoom out here to the 1 month, 1 hour time frame, I drew a new ascending level of support because we did break our other one. And this one goes back to the 28th, which is actually before our run up. And we do get a good amount of touch points here. We have 1 touch point, 2 touch points, 3, 4 touch points. We also have 5 touch points up here. So it is a good trend line to draw here. The other thing that I want to point out here on the 1 month, 1 hour time frame is the fact that we bounced off of our 200 exponential moving average or moving average. This is really nice to see. We've done this in the past and we did it again today, which shows the bullish momentum within the stock. Yes, we saw heavy selling pressure today, guys. Big deal. We saw heavy selling pressure. We've seen it before. We saw it back here on the 10th. We saw it back here on the 16th. And what did we do the next day? We ripped. Not saying that we're going to rip tomorrow, but if you take a look at the RSI is sitting at 38.89. I know I say take this indicator with a grain of salt, but when it's down this low, you're going to look for a bounce. And the question is, how far are we going to bounce, really? Now, the thing that I really want to do is zoom out here to the year-to-date time frame and just really help everyone understand we are doing so well. Now, today's candle, when you take a look at it, is a big fat doji candle. And the fact that this is a big fat doji candle, it indicates indecision. Well, the last time that we had a big fat red doji candle was back here on the 16th, and the next day we had a green day. Not trying to tell the future or anything like that, but I mean, if you read charts and you look at patterns long enough, you start understanding it. And I have a feeling tomorrow we're probably going to have a green day. Just my opinion. How much of a green day? I don't know. The other thing I want to highlight here is we traded 184 million shares today. It's less than what we traded on Friday. So the fact that we're trading less, and yes, it was a red day, shows that a lot of people aren't selling. If we were selling and we were panic selling, this would have been a lot higher. The fact that this is lower is a bullish sign for the stock, in my personal opinion. Also, guys, when in doubt, year-to-date time frame, day time frame, look at it. This is a scoreboard, in my personal opinion, and we're doing perfectly fine. If you need a better scoreboard, look at the weekly time frame because you can really see how far we've come. It's absolutely insane, guys. Now, the next thing I want to cover is the short interest here. And how many times do we have to tell you, cue the SpongeBob?
How many times do we have to teach you this lesson, old man?
But seriously though, guys, like how many times do we got to tell them, like, we're not giving up our shares. They're going to have to come prime from our cold dead hands. The short interest today increased 4.11%. That is insane, guys. That is a large jump. We're sitting at 7.35 million shares borrowed, 3.63 returned. So we have a positive change of 4 million shares, 94% utilized. Starting to creep that utilization back up there. And the shorts, in my personal opinion, are trying to hammer this stock as much as they can and probably are averaging in because they're so far underneath the water that they're going, well, we're either going to get margin called or we got to put more money in this thing. And us apes are just going, okay, well, we'll just buy the dip and hodl. Like, we're going to the moon. Like, buy the dip, hodl. And in my opinion, guys, I don't think we're going to see a giant violent squeeze. I think this is going to be more along the lines of a Tesla squeeze where it just continues to go up and up and up and up over time. And also, Tesla squeeze did dip down and it did go up too. So just prepare, guys. This is probably not going to be something that's going to be overnight. It is definitely going to be a very long, drawn out battle. Probably preaching to the choir, but I'm just going to say it anyways. But taking a look here, short interest of free float is continuing to increase. Interestingly enough, it's starting to increase again. The shorts, 90.6 million shares on loan. Free float on loan, 17%. Estimated short interest of free float, 13.64%. You put two of those together, you're over 30% short position within AMC. Our current short interest estimated is sitting at 72.6 million shares. Sorry, I can't get my tongue apparently out of the way, which is huge, guys. Like, this is still a heavily shorted stock and still will absolutely squeeze. Are we in the squeeze right now? No, you're not definitely in the squeeze right now, in my personal opinion. Now, if we take a look here at Stocko Tracker and hop up here, we have 67,308 calls. in the money. Yeah, this is not crazy like it was last week where we had over 400,000 calls in the money. It's gonna probably be more of a normal week, guys, in my personal opinion. But $60, 24,084 calls get put in the money, which would be awesome to get to. We have 600,000 short shares of AMC available to borrow. 19,738 short ETFs. I believe this number actually drastically increased between yesterday's video and today's video. The other thing that I really want to talk about is the out of money options, 211,362. The out of money puts, 204,873. Definitely a lot of puts out of the money, which would be beautiful to see them continuously be put out of the money, and maybe put more of those 21,400 out of the money too, instead of in the money. The next thing I want to talk about is our failures to deliver. And this is a number that I'm going to be like absolutely giddily excited to talk about when we finally see it on June 2nd and 3rd. The 28th, our closing price was $26.52, 174,345 FTDs. And that was at $26. I can only imagine what is going to be when we see our 100% day. I think it's going to be, personally, in my opinion, stupid. But guys, yes, AMC did have a rough day. Look at the chart. When in doubt, zoom out. I prefer to look at the day time frame because it gives you more data than the weekly time frame. But we are still sitting absolutely pretty. NSCC 2021-002 got approved today. It is definitely going to help us apes out. Don't expect everyone to have margin calls. Do not expect that at all. There are funds out there and there are institutions out there that play it by the book, and they're not going to have any problem. There's going to be ones that don't play it by the book and are going to have a problem. So we may hear about some, we may not hear about any at all, guys. So just be prepared for that. But this is a long battle. Just continue the fight. Diamond hands to the moon, guys. And I'll see you guys in the next one. Peace.